what program you qualify for, what you can and can't do along those lines, any kind of special circumstances depending on each individual person, everything you can possibly think of. That's what we're going to go with first. So you just ask me, what you say is you reach out to me, you reach out to Lisette, to Jonathan, to anybody, any of your realtor, loan officer you may know, and you say, hey, I want to get going. And let's get this application, let's pull my credit, and see where I qualify, see where I'm at.
Right.
Now, I don't know if on your end there's anything else you want to add to that, but
For the first steps of buying a home,
mm-hmm.
Yeah, so I know a lot of people do reach out to us realtors first when it comes down to
Karen Lewis, what's up?
Buying.
AKA Phil. Go ahead, sorry.
You're doing this right now.
Yes, go ahead, sorry.
So, yeah, a lot of people reach out to the realtors first, which is totally fine, but understand that, as Mr. Agudelo said, pre-approval is the very, very, very first step that you need to do. So if we send you over to a loan officer first, it's protocol. That's just how we're supposed to do it. So
you want to be able to know what you can show and what you can't show. And
the only way to find that out is to get that credit pulled, see where they qualify at, and that way you're not just sending them houses that they might fall in love with and then find out later, oh, we can't afford that much, that we can't qualify for that house.
Yeah, it saves time for everyone around, pretty much all of us, the realtor, but most importantly, your time as well. We don't want you sitting and sending us houses that in reality you can't afford, or, based on the papers and on the numbers that you can't afford. So. And
it's funny because I was just thinking, it's not only necessarily what you can't afford. You might make too much money for a certain program you want to use.
Yeah, that too.
So it's not necessarily like we're saying like, oh, hey, we need to do this to see how little you qualify for. No, it's more like, yeah, we find out what your limit is, what you qualify for, but we also need to know what program to place you in. Can you take advantage of one of these first-time homebuyer grants? Do you make too much money? Are you buying in a town that whatever program you're trying to use is not qualified for? Right. So it's not only that. So look, if you might think, oh, I make $100,000 a year, I have $50,000 in the bank, and I've been at my job for 20 years. I don't need a pre-approval. I'm good to go. Well, no, because then you're still going to need to know which direction you're going to head in, what general program you're going to use and how it works. So you'll be able to bring a more complete understanding for when you're looking for a home.
Right. And question for you, is that the same thing as a pre-qualification?
So a pre-qualification and a pre-approval, yes. It's a nice little segue to our next topic, which is there's a difference, especially, so let me backtrack a little. When I was at different lenders, different mortgage brokers, we basically treated a pre-approval and a pre-qualification the same way. It was basically just getting somebody the paper. Doesn't necessarily mean that's exactly what it means. Now that I'm here at Northpointe, the way we work with a pre-approval and a pre-qualification, a true pre-approval is what they give you, which is basically an approval minus the house. So we are going to approve you on a certain number. You're going to get conditions. You're going to submit conditions, have them reviewed. The underwriter is actually looking at the file, everything, and they'll give you that approval even if you haven't found the house. So it's a true pre-approval, basically. And when I worked at other places, it was known as a TBD loan, a to be determined. Same kind of situation where you're looking for a house, but you don't want to wait. Let's say it takes you a month to find a house, and then now it's going to take you another month to close. While as if we're doing this, we're doing all the stuff up front. You find a house, you've already done a lot of the work. Now you're looking at getting the house appraised, making sure the value is where it should be, and then you're basically ready to close. So it's a good bonus, and it's something I definitely wanted to touch on in this video, specifically because of the difference. At least now that I'm at this company, how they work it. I would need all documentation that I would need for any kind of approval. They'll verify your employment, check your bank statements, everything. You just get it out of the way beforehand, and then once you find the house, it shortens that aspect of it, as opposed to finding the house and then doing all the stuff. Pre-qualification, just to answer the other side of it, a pre-qualification is literally just like, okay, based on the information you gave me, whether it be that verbal information or maybe you gave me a pay stub or two, this is how much you qualify for based on that information, but without an underwriter looking at it, without it going through processing or any of that stuff. So it's literally just like, all right, it's like a quote, you know, like like when you do insurance, you get a quote and then you get your policy. Kind of along the same lines. The pre-qualification is almost it's like the quote. The pre-approval, the true pre-approval, the way we do it is more like the policy. Like you're rolling. All we need now is the house.
So you're basically saying a pre-approval is a stronger document in that sense.
Absolutely. If you're going to, well, you can actually answer that question for me. If you're listing a property, right, and somebody comes to you and say, hey, my client is qualified for up to this much. And then somebody else says, hey, my client is approved. You just need to pass a FHA inspection and we're good to go. Or you just need to get that appraisal and we're good to go. Right. Whether it be FHA, conventional, no matter what it may be. What are you going to say? Who are you going to say yes to?
Well, I would advise my seller to go with a person who has a solid pre-approval.
Yeah, it's easy. It's a layup. It's a slam dunk for the buyer once they're at that stage and they're already set up like that. So
it's a step forward basically from the
correct.
pre-qual. The pre-qual is kind of the starting point.
Correct.
The starting line.
Like I said, I know the videos with Jonathan, the ticket that says you can go on the ride.
There you go. Pre-approval, you guys. Aim for the pre-approval basically is what we're trying to get at here.
Yes,
right?
yes. Yeah. And it's, again, obviously it's going to be more work up front because you're going to need that documentation. You're going to go through the whole loan process. Minus the property. Once we find the property, then we add that to it and good to go.
All right. Anything else?
Is there any questions in regards to that? Because that one I know can be, we kind of went straight in from the first step into the pre-approval versus pre-qualification. Does anybody have any questions in regards to the difference between the two, the pre-approval and the pre-qualification, in regards to how to take that first step, what you need to know, or any question you may have for us in general? Hello, guys. I can barely read. Even with my glasses, I can barely see all the way over there. I'm sorry. I apologize.
And I forgot my glasses. Man, I think we're quiet.
All right. So if you guys do have any questions, please feel free. Even if we're in the middle of talking, just throw it out there. If we're done with the video, go ahead and throw it out there as well. Just comment on it. Shoot us a direct message. You can call me at 401-365-7161. I don't know if Lisette wants to do that right now, give your number or not, but at least on the loan end, you can hit me up at that point. Shoot me a text or give me a call, and I'll try to answer any question you may have. So on to the next.
All right. I think we're at the very last point. What programs are available now? So you mentioned that the $7,500 grant is going away on Friday.
It is going to be suspended.
What are you guys going to do?
Yes. So as you guys may have known, if you've watched any of our videos before, because we spoke about it at length, it was a grant that gave you $7,500 towards down payment. It was a huge deal because that didn't have to be repaid. If you do not have down payment money, there's still other options. If you're trying to go on the FHA side, we can go through RI Housing as well with the 100% financing. The difference between that and the grant is that the 100% financing is the down payment is being rolled into the loan, and it gets paid over 15 years. Okay? So it's called it's what it is. It's a silent second. Okay, the second mortgage. Okay, so you get the one loan for the whatever the loan amount may be for the total amount, then you get the other loan for the down payment. Okay, so if it's a purchase price of $200,000, for example, minimum down payment is 3.5%. What happens there is you get a loan for the 3.5% will be $7,000. So you get a loan for the 7,000 and you get a loan for the 193,000. And that gets all rolled in to one loan. So not to one loan, it's the two loans, but you make the payment on that. For 15 years, you pay on the second loan. After that, 15 years, it's the same rate as the main loan. After the 15 years is up, you're only paying on the principal, the main loan.
Gotcha.
So if your interest rate was 4.5 or a 5 today, you'd be looking at that rate for both of those loans. So I mean, it's a big help for people that have their credit where they want it or where it needs to be, but just don't have that upfront cash for the down payment. Because $7,000 to come up with, $8,000, 10 change sometimes, depending on the purchase price, especially with the values how they are right now and stuff. It's tough. It's a little harder, to get together. So it is a very helpful program in that sense. There's also a lot of FHA programs that you go in directly with FHA as a first-time home buyer. You can put 3.5% down. Take advantage of just the regular FHA programs with us. We will close you if you go 3.5% down. We'll be able to close you pretty fast. I have a loan in there right now. I just started at this company. Literally threw the loan into the pipeline as soon as a week after starting, because the first week was all training. Put it in there. Which was 2 weeks ago. Right now, I have all my conditions in, waiting on everything to clear, and hopefully, unless they come back and say they need a little more explanation on one or two things, I'm expecting a clear to close sometime next week, and
That's fast.
That's pretty fast. Granted, not every loan's going to be that way. Not every
Right.
loan's going to be that fast. But as long as we work together and get everything up, how it should be, and communicate well, it's going to go as fast as we allow it to.
Right.
So just wanted to throw that out there. But yeah, so there's also closing cost assistance. Sorry, going back to the programs that you have. Along with 100% financing, you can also get closing cost assistance through Rhode Island Housing. So what that means is, with every loan, there's closing costs for the buyer and closing costs for the seller. For the most part, we try to get seller paid closing costs, but sometimes the seller doesn't want to pay the closing costs. They won't pay it because they feel like they've lowered the price enough.
Right.
Or they just might not be able to. They need every dollar from that sale for whatever it is they need to do. With Rhode Island Housing, we do have that option of the closing cost assistance. So where they'll give you the loan for the main, the big loan amount for the main purchase, the down payment amount, and the closing cost. What that does is it really frees you up to know that, okay, even though I have $2,000 in the bank and I'm buying this single family home, I'm still going to be able to buy it and be okay. Yes, all those are rolled into the loan. All those are stuff that you're going to be paying on, but it's one of those deals that can really, really, really help you out, really
Right.
set you up. If, like I said, a lot of people spend money fixing their credit, getting your credit to where it needs to be. It costs time and money. That's the key ingredients to getting your credit where it needs to be. If you can pay off whatever you need to pay off, and it leaves you with not enough for that down payment, for that closing cost, take advantage of some of those programs, and we'd be able to really get you into your first home.
And some people might be, oh, well, it's being rolled into the loan and this, that, and the other. But look at it the other way around. You are a homeowner. You are building equity in a property that's yours. So if you decide to sell 10, 15, 20 years down the line, that's money that's going into your pocket. You're not paying rent to someone that's, you're paying somebody else's mortgage at the end of the day, plus some. And
Yep.
It's an opportunity for you. Yeah, it's rolled into the loan, but you are a homeowner. You can do whatever you want.
And sorry to interrupt, and it's not for everyone. Like some people, people would rather pay that down payment, and that's fine. If you can do it and you can pay it, I will always recommend put the down payment yourself.
Right.
If you can do it, it's going to be a smoother process. It's going to be less. There's no that's one less aspect we're taking out of it if you're doing it on your own that way. This is more along the lines for people that need a little bit of help up front. Maybe don't you might have $15,000 in the bank, but you want to use 10 of that to make the house your own, change the
Right.
cabinets, paint, do this, that, or the other. So you know, hey, you know what? I don't want to touch that money I have. Let me go ahead and take advantage of this program. Again, you have to be a first-time home buyer for this, which means you can't have owned a property in the last 3 years. But yeah, I mean, it's definitely tailored to the people that need that upfront cost assistance,
Right.
as opposed to, you know, having the credit where it needs to be and then still having the money, you know, and being able to put it down yourself. Like I said, I would always recommend to go ahead and put that down payment if you can yourself. But if you need that assistance, it's definitely there, and it's something you should definitely take advantage of.
Yeah.
Does anybody have any questions about any of the stuff we've covered
This is for
today?
you guys. Any questions that you have, anything in regards to what we covered, or any other burning questions you may have related to real estate, throw it out there. That's what we're here for.
And remember, share. You share the video, you share this live feed, we enter your name into a hat to win a $25 gift card for the place of your choice. Also, if you answer at the end of this, at the 5th week, we're going to do 3 questions. Whoever answers, the first person to answer the question correctly on the live feed will receive a $5 gift card either to Starbucks or Dunkin' Donuts. Soon to be Dunkin', apparently.
Soon to be
They're
Dunkin',
changing,
you
they're
guys.
taking the donuts away from it, but simplifying everything. But yeah,
Speaking
So-
of that,
yeah, exactly. Well,
shout out to our last series winners.
oh, yes.
Pam and Priscilla. Congrats on getting your $5 gift card to Dunkin' Donuts and Starbucks.
Yes, congratulations.
And the
And-
huge winner, the huge winner, Holly, for your gift card, your $20 gift card to the place of your choice. So we just want to throw that shout out there for you guys again. And
Absolutely,
continue
yes.
to share, continue to tune in and answer questions and interact with us so you can have a chance to win as well on week 5.
Yes, absolutely. It's what it's for. But we just want to reach as many people as we can, so they go in with basically they're going into the battle to try to buy this house with all the bullets they can have. You know, I want you to be able to know what questions to ask, what to do. If you're gonna go with us, if you're gonna work with me, you're gonna work with Lisette or Jonathan, great. We'd appreciate it. We love it. That's what we do, right? But even if you're gonna go with another lender, another realtor, another whatever you want to do, we want you to be educated and know what questions to ask. Be prepared, and just so you could be a more educated buyer. It's all about informing you guys. So if you guys don't have any more questions or any questions, we haven't got any today, but
Yeah, it's so sad.
if you do not have any questions, remember, or if you think about it later, you can message me, you can message Lisette, you can the Bolano team, Bolano Home. You can, like I said, give me a call, shoot me a text, 401-365-7161, and I'll be happy to answer your questions and get you pointed in the right direction.
Last call for questions before we tune out. I don't see anything
Which
on my
hopefully
end.
not what people have been doing to us, right? Tuning out. All right, everybody. Well, have a good night. Just remember that just a quick reminder of what we went over. First step, which is giving me a call or a lender, but preferably me. Give me a call, figure out how much you qualify for, what programs you fit in, you can use. Pre-approval versus pre-qualified. Pre-approval basically is you're good to go. All you need is to find the house. You've already gone through underwriting and the whole 9. Pre-qualification is basically, hey, based on the info you gave me, this is roughly where you qualify at, without really submitting to underwriting or processing or any of that stuff. And take advantage of the first time home buyers programs that are still out there. There's still 100% financing. There's still the closing cost assistance, stuff that can really help you if you are purchasing your first home.
Yeah.
All right. And on that note, have a good night, everybody.
We'll see you guys next time.
See you next week.
What part of the